The issues that they have are many, and they have to deal with how American companies can build businesses in a seamless, straightforward way. And what they said is, since Biden, what Trump has done is he cleaned the decks and allowed it. They all said that. They were forced to say that. They all said that, which I thought was really cool. This is again why I said earlier, I'm super proud of what David has done. Like, it was palpable the respect that all these guys have, which is awesome. But then what the president says is, I can take care of this. I can do that. That's not going to stand. He's like, what you see is you have these American titans of industry. I've said this before, Jason. The whole premise of the American dream, I think, rests on economic and military supremacy. That is derived from technical supremacy. That group of people are the geniuses that create the technical supremacy for the world. And he is their biggest advocate. And that's inspiring.
Really interesting. Where, as I mentioned, David Sachs is now serving in the administration. The second gentleman who's commenting there is Jamal Al-Qia, who was one of the earliest employees, I think, did really well on Meta, Facebook, and later. Meta has become a kind of a Silicon Valley investor, was in the room as well. I really like the message and the shift that we're seeing. Technical technology supremacy is a national security priority for the United States, and that the industry, irrespective of political leanings, should come together, work hand in hand with the president to make that a reality. Not exactly conservative activists, but coming together in a really positive way. That's what the country and administration is doing, what the business is doing. And just from our own kind of involvement in the it's refreshing to see highlighting technical innovation, taking a leading role and pushing the American economy.
And you can see many of these leaders, just dipping their toe in the water at first and how they're thinking the past. I think what they really want is an administration that unshackles their industry for national security. And what they don't want is to get egg on their face and have the Trump administration say something or do something that, with them in the room or associated with them, that is hyper partisan. And I think they're cautiously wading into this, and with pretty real success so far. And it's good for the country. Everything's politics, primarily because we have a great power competitor in China, and that nation knows no limits on politics, and we have to compete with AI. We have to certainly all these different industries, and right now what we're seeing is tech leaders coming together and realizing that and wanting to have all that economic, that powerhouse remain in the United States.
And it's really refreshing to see this new media landscape where you can go and listen to this All In podcast, and it's people that were in the room. It's about an hour-long episode of them just talking back and forth. What was it like? What was discussed there? And you just didn't have that in years past. I think it's a good new emerging way for business to interact with the public at large. I do want to talk about kind of specifically what actually happened at the tech dinner. Maybe one of the biggest headlines coming out of that, we saw Mark Zuckerberg sitting at the right hand of President Trump. He had one of the most headline-grabbing announcements, a frankly eye-watering amount of $600 billion that he is committing for Meta to invest in infrastructure. I have 2 points here that I think are worth really highlighting. The first is, at that amount of investment, and this is a commitment through 2028, so it's pretty near term deployment of that capital. First and foremost, it indicates to me, even though Mark Zuckerberg didn't say this outright, that there's a shift where Meta is becoming not just a software company, but an infrastructure company. And part of becoming an infrastructure company is becoming an energy company. You're not going to get there to deploy that level of investment in AI data centers without going a little further up the value chain into the actual energy production. Meta and these other big hyperscalers have already been doing some of that. What I think this is sort of a hyper escalation and acceleration of that trend where you're going to see AI-centric companies become some of the largest investors in energy specifically. In addition to that, that amount of capital, even for Meta, seems a difficult lift from a fundraising perspective. Definitely not something that they would fund out of cash flow. Their prior kind of guidance for this year's CapEx was $72 billion. And at the time, that seemed a remarkable amount to be able to deploy.
Was that just AI CapEx, or is that
overwhelmingly dominated? That was their total CapEx kind of guidance for this year, right? But overwhelmingly AI focused, and really starting to stretch kind of with on the boundaries outside of their existing cash flow, their existing balance sheet. And they've already done some deals, $50 billion investment in the Hyperion data center in Louisiana, where they brought outside financing in. They had investment from PIMCO and Blue Owl Capital in that deal. So as we look at the capital markets landscape, you've got this commitment from just one company now at $600 billion. You know, the others aren't going to stand out, just play second fiddle. You're going to see more and more bigger announcements. I would look for more special purpose vehicles, SPACs, different partnerships, off balance and creative ways, off balance sheet and creative ways to raise up that money and bring the cost of capital down so you don't have a massive dilution of the existing shareholder base.
Maybe private credit. Do you think that could be part of the equation?
At this point, when you're talking about $600 billion, it's got to be in all of the above. Show me your best deal. Yeah. I think that's what Zuckerberg's probably going around Wall Street, and I think he'll be here in Dallas too, fundraising around, let's get creative. How do we deploy this level of capital? And by the way, he had made a statement. There was some controversy around, did he just make this number up? Because he got caught on a hot mic saying, well, I didn't know what number we were going to go with. He was saying this to the president, right? I think the interesting thing is he later came out on Facebook and said, well, the 600 billion was kind of a lower number, which is absolutely remarkable.
Yeah.
That they had been talking about for the near term. And then he had broader expectations and plans of what sort of a longer, call it a 5 to 10 year strategic plan for capital deployment might look like. And it was some multiple of that amount of investment. You're at a point where even if you take the position that this is kind of pie in the sky headline grabbing, if they even do a fraction of this amount in the next couple of years, it's a complete shift in the American capital markets of where capital is being deployed, who's driving that, what players are at the table making that happen. And I'm rooting for Meta. I'd say I'm rooting for Google. I'm rooting for OpenAI to actually deploy this. It's awesome to see, and I'm glad that the president is championing it.
And Tim Cook also had the kind of follow on Me Too. Apple's gonna invest $600 billion as well. In that
you're doing 600, I'm doing 600.
Yeah, he said it in the same sentence almost. But what I find really interesting is the historical importance of energy is undoubted. I mean, you have societies thrive. Societies that have access to energy thrive, and from World War II to the kind of that post-industrial time period, energy was dominant, and really software didn't eat the world till the 90s and early 2000s. And it's almost like we kind of forgot about energy being the most important commodity globally because software was busy eating the world, and these companies, AI or Meta, Microsoft, all these companies that were building software, their valuations were huge, their multiples were huge. And now they are all the same companies that are now kind of reinvesting into one of the oldest industries in the world, which is the energy industry.
You've got the super high growth, kind of Mag 7 story of being a Wall Street darling, merging in with sort of the old incumbent industry, much more capital intensive, hard infrastructure, supply chain struggles. It's going to be a real challenge. Many more headlines to come. Speculation as well at that level of investment. Would a Meta or someone else accelerate their own custom chips, building out more of their own manufacturing
NVIDIA.
capacity. And so you've seen huge narrative, right, that we're over concentrated in Taiwan. TSMC is building a plant in the United States in Arizona. That's good. The CHIPS Act has spurred some build out. You're yet to see a successful run, at least. There's been talk and dabbling, a successful run of a new entrant. And that's been some of the speculation around Meta. If you're talking 600 billion and then maybe some multiple of that within a broader strategic plan, it feels like some of that could be peeled off for a more of like a moonshot type return if you were able to break the existing oligopoly in semiconductors. Any way you slice it, this is a reset of the landscape. I think that's what the president wanted from this dinner, so he can declare victory at least in that respect. But we collectively as a country can't declare victory until we start to see the actual infrastructure built. You and I know from driving around Texas to different data centers, you pick some timeline and it immediately starts sliding backwards because of the supply chain challenges. You've got all these different international vendors. There's the tariff impacts here, of course, as well.
There's the interconnection studies with ERCOT.
That's a big one we're going to get into today as well, that you have some regulatory issues and concerns that are valid, but are part of the picture as well. And then you've got just the sheer feedback loop from now Meta saying 600. It used to be Stargate and Abilene from OpenAI was the biggest project. Now they're kind of leapfrogging. You mentioned Apple's coming up. So you get this sort of arms race for relatively scarce and difficult to de-bottleneck supply chains. The costs could go through the roof, and then it doesn't make sense to deploy the investment, even if you can actually raise that money. So a lot of different angles to see this. Overall, the dinner is kind of a feel-good moment, I think, for the country, for the administration, and for those business leaders getting that invite. But it's a lot remains to be seen, I think, is the way that I would put it.
Yeah, and I think the people that, or the person that didn't like it the most was probably Xi Jinping in China.
Yeah,
seeing a unified U.S. tech industry,
the band's all coming together
in the White House, talking about great power competition. And our next guest is someone who knows a little bit about power capacity, data centers. Of course, I'm saying a little as an understatement. Kent Draper, who is the chief commercial officer at Iron Energy, will be joining us shortly. Kent and Iron have just been on an incredible run lately. I mean, the stock price, tripled in the last 6 months. We'll get the stock prices running on the ticker, but Bryce will get us the exact numbers. But Kent, can you hear us? If so, welcome to the show.
Thanks, Lee. Yeah, just picked up the sound.
Awesome. Well, that's good timing. We've got Kent Draper with us. We've been talking about Meta's $600 billion commitment to mostly AI data centers. Of course, Stargate before that, and Apple. And there's a few other things that are on our docket today to talk about expansion of data center capacity throughout the United States. But y'all's story has been incredible. Now the largest market cap Bitcoin miner, probably the only Bitcoin miner that is running your own GPUs, that's kind of producing AI compute to sell on a marketplace rather than to sell to direct to kind of an aggregator, if you will. So that's a unique strategy. The market's rewarding you guys, it seems like. What's the secret to that success? The last 6 months must have been a whirlwind.
The last 6 months have been a whirlwind. It's an amazingly dynamic market that we're in. Things are changing rapidly. Obviously, a huge amount of opportunity. And you mentioned, the spending by Meta, and I think consistently across all of the big hyperscalers, you're seeing increased data center spending, which just gives I think the best view of the demand position in the market. If they're actually putting real dollars into the ground and they continue to do so at an accelerating pace, I think that bodes extremely well for us and the position we built up. But it really, hasn't been an overnight success. It's been a consistent set of progress from us over 7 years since the business was founded. And I think the key thing from our perspective is we actually always had these sort of use cases in mind. So when the business was founded, it was originally, on the basis of a thesis around the world becoming more data dependent, requiring energy at large scale for more power dense compute, a vision that the urban areas were going to become more land constrained, more power constrained, and data centers would actually need to go out to where the power is. And so for us, that's how we've been able to build up such a large land and power position. We've got just under 3 gigawatts of secured power. So that's under signed interconnection agreements, over 800 megawatts of data centers operating today, and a large development pipeline sitting behind that. But it always comes back to that original thesis, and our seed decks from day one had AI, ML as potential use cases, and that sort of informed everything we do. Most particularly the vertical integration of the business.
So, Kent, tell us a little bit more about the AI strategy. Most Bitcoin miners that are developing AI compute have a partner that is actually running the GPUs, and the Bitcoin miner is kind of the the base layer, power infrastructure, owns the real estate, and leases sort of the rack space to a CoreWeave or a large company like that. Are you guys, you're a preferred NVIDIA partner. Does that mean that NVIDIA has a marketplace where people are buying compute and potentially using y'all's GPUs? Is that how that works?
Yeah, so NVIDIA is developing its own marketplace, and we do view that as potentially an attractive path to market for us, but it's certainly not the only thing that we're dependent on. And in fact, today, all of our customer demand has been sourced directly. So moving forward, we think the NVIDIA marketplace is certainly interesting, but we'll have a number of different paths to market. And I think that's particularly important as we scale out the business here. And one of the big benefits of our portfolios, because we have existing operating data centers that can be converted to AI use cases very quickly, we can scale extremely rapidly. So that is one benefit of our vertical integration. There's also a number of other benefits there around things like customer service. So, for example, you mentioned some of the other neo clouds that are using third-party data center space. If the customer has an issue, they obviously call the neo cloud. The neo cloud has to then call the data center provider. The data center provider may have multiple tenants, multiple data centers that they're running, multiple different use cases within that data center, all of which means you just get a much slower response time. Whereas for us, we have staff on the ground 24/7. We're obviously fully incentivized and aligned to make sure we're responding to customer issues extremely quickly, given that it is ultimately our cloud service that we're running out of those data centers. It also means we have better control of the operational environment. And so a number of our customers have said that the clusters that they're running with us are amongst the best performing within their fleet. And many of them have, 10 plus data centers that they're operating in. So I think there are a number of distinct advantages to that vertical integration rather than the split model. And I think to some extent, you're starting to see some of the other players realize that. Obviously, there's the CoreWeave Core Scientific deal. That to us was a clear, seemed like clear recognition from CoreWeave that access to land and power is key and vertical integration is key.
Yeah,
Kent, I want to commend you on having the vision to include energy in the company's name, because we're big believers here that the high performance computing business is at its core an energy business. I think one of the really unique parts of your story as a company is kind of the international aspect and the process you went through. And I'd like you to shed some light on that, on how the company was built over time and then ultimately found, a major opportunity in Texas. What attracted you to Texas? We're obviously sitting here in Dallas. We're cheering for everywhere to invest and build up new technology, but we're proudest to see Texas win. We'll be honest about that. and proud to highlight the investment that you're making here. Can you take us through that process, how you ended up, how it's gone, why Texas was a winner for your portfolio and capital allocation approach?
Yeah, absolutely. And energy, I think, is the fundamental part of the story for us. And yeah, as I said, going back to that original thesis, it was always around this exponential growth in the digital world, and a recognition that the development cycles for the real world infrastructure to support that are long. And we were, trying to get ahead of the curve in order to build up this land and power portfolio. And if you listen to NVIDIA or OpenAI or any of the key players in the industry talking about the key pinch points, it is the access to land and power. It's not that access to equipment. It's not access to other parts of the value chain. It really is the land and power that is the key driver. And from our perspective, when we started out, 7 years ago with our initial development cycle, and we were looking at jurisdictions, we set out a very clear number of criteria that were important to us. So we wanted to be in OECD countries. We wanted to be in jurisdictions that had very clear regulatory and governmental policies. Now, it doesn't necessarily mean it has to be, all deregulated or regulated. It just needed to be well understood. There needed to be cheap cost of power, and importantly for us, abundant renewables, because we power our data centers with 100% renewable energy. So when you start, looking at those criteria, you actually narrow down the markets pretty quickly. And Texas for us was extremely attractive in the sense that 20 years ago when the CREZ build out was started. So this is the large scale transmission build out across Texas. I think there was enormous foresight there from the people that developed that program. And what you see in Texas that's quite unique are just these very large transmission lines spanning, a huge portion of the state. And that's encouraged an enormous amount of renewable energy generation to come online. And what we could see instantly when we started looking at Texas was the ability to go out into certain areas and get access to large land holdings, large amounts of power at single sites, which we thought was going to be more important as the compute became more power dense. It's a deregulated power market in Texas, some of the cheapest rates that you see across the US. The permitting environment is extremely favorable, relative to some other jurisdictions. So it absolutely had all of the various elements that we look for in sites. And I think another element that's come to light more recently is that there's a very good fiber backbone throughout Texas as well. So in terms of access to high bandwidth, low latency connections, Texas is actually a very good place for that.
Now, just to pull on that thread a little bit more, Kent, even in West Texas, obviously the CREZ runs over West Texas, all that renewables. Most of the renewables in Texas, especially that wind corridor, is in West Texas. So you're saying that the fiber that's running out there, kind of through Abilene up through Lubbock, along the interstate corridors, is sufficient for most of the AI and GPU based compute that you guys are working on. And I'm not sure, how much you can speak to that, because some of it's probably proprietary or has national security implications as far as like where the fiber is and the capacity of it. But y'all are finding it to be sufficient for all of your end use customers?
Yeah, absolutely. I mean, there's a very major fiber highway that runs from Dallas up to Denver, and that runs through West Texas. There are all of the major tier one carriers have lines along that fiber highway. It's incredibly low latency to Dallas, so sub 6 milliseconds. And Dallas is a major hub for all the hyperscalers. So, whichever party people use in terms of their general cloud compute and data, they can get access very quickly through those low latency connections. So it's absolutely suitable. And I think going back to one of my original points, urban areas are already very constrained. It's hard to find land at large scale. It's hard to find power at large scale. If you can find power, it generally requires very large upgrades, which are difficult in constrained urban environments, and often the time to power is very long. Urban development is very difficult to get these large data centers where you have single, very large clusters operating for AI purposes. And so we think increasingly moving forward, you're going to see these data center campuses moving out of urban environments and actually going to where the power is. So our Sweetwater campus is a perfect example of that. We've got 2 gigawatts of power secured under executed connection agreements across 2 sites, with the first 1.4 gigawatt grid connection being available in April 2026. So that's extremely unique. Now, we did start that a number of years ago, but if you're looking for that sort of scale power, I just don't think you can find it in urban environments.
No, you can't. And what you guys have done, the market has rewarded, up 328% over the last 6 months, up 8% today. That may have something to do with the price of Bitcoin being up a little bit today too. But y'all's access to power, I think, is the key thing that the market has seen and rewarded over the last 6 months and beyond. Why do you think the market was so slow to recognize? You guys have been working on some of these sites for a while, because to develop sites takes a lot of time and a lot of expertise. And to acquire sites, you have to typically, right now, you're having to overpay. You're paying a large premium if you're just coming in as a buyer of a site, mostly because it takes so much time and expertise to develop them. And you can't necessarily buy those unless you're going to pay a premium right now. Is there some expectation? I know you probably can't speak to this, but the market is obviously saying, hey, Iron's built something. You're up 328% in the last 6 months. I've got to assume the investors in Iron are thinking it's this power pipeline and the chance for someone to just say, hey, they spent the time and effort to procure this power. They went through the interconnection studies, the load studies. A hyperscaler is just gonna acquire through some sort of all stock deal or something. Is that something that you're hearing in amongst the kind of the investors in the Iron community?
Yeah, I think more than kind of M&A opportunities, I think it's really the expansion of our AI cloud service that is probably driving most of that. And I think there's a couple of pieces to it that are interesting. So obviously, historically, we've had the Bitcoin mining business. And I think if you look generally around the landscape of listed Bitcoin miners, it's been hard for many of them to turn a profit because they're not necessarily fully vertically integrated or don't have access to very low cost power. Whereas for us, the Bitcoin mining business is actually extremely profitable. So we're on a $1 billion annual revenue run rate with the 50 exahash we have installed today at current Bitcoin economics. And we're making 75% gross margins on that. So that's revenues less the electricity. And then when you take into account all of the overheads of the business, including all of the AI overheads, it's a $650 million EBITDA run rate. So the Bitcoin mining side of the business is extremely profitable. And I think there's starting to be a bit of a recognition of that in the market, that we are quite unique. We have the highest fleet efficiency in the industry. We've got one of the lowest costs of power and very good operating efficiency. So, our average operating hash rate relative to the nameplate is extremely good. And all of that means that we've got the lowest cash cost out of any of the listed miners. So I think you're starting to see some recognition of that. And that gives us an extremely good base from which to build on the AI side of the business. And we recently announced an expansion of our AI cloud services fleet of GPUs. So we purchased a number of additional Blackwell GPUs. So that's the latest generation of GPU from NVIDIA. That'll take our operating fleet to over 10,000 GPUs. That'll give us an annualized revenue run rate of 200 to 250 million. So I think the market is really starting to see the actual build out of that AI cloud services business and seeing that it's a real thing. And this is something we talk about a lot, because there's a lot of talk in the market around pivots to AI and things like that. Well, we've actually been doing it for 18 months. We've been running this cloud service, and so it's very observable with us. It's not, guesswork as to whether we're going to be able to do it. We have been doing it, and we're now just ramping up the expansion of that. And I think when you look at some of the comps out there in the market, so if you look at like Nebius, for example, they've got a 1 gigawatt secured power portfolio or data center portfolio. They're trading at $20 billion. If you look at CoreWeave, they're around 2 gigawatts of secure power. They're trading at $45 billion. We have a 3 gigawatt secured pipeline of power and trading significantly less than them. So I think you are starting to see that recognition from investors as to the opportunity we have ahead of us.
And you guys were the largest market cap by market cap at the moment, but also in publicly traded in the United States, also now in the top 50 largest Australian-based companies, I noticed. Are y'all climbing the ladders over there? I think it was like 42 or something like that.
Yeah, obviously, that comes with that growth that you mentioned in the share price, but something we're extremely proud of, obviously, but yeah, it's very focused on the North American markets with our current operations, but we do have those Australian roots, and nice to actually see the share price growing and moving up those rankings.
Well, there were some studies out about when Americans hear Australian accents, they automatically give a 10 IQ point bump to the person speaking. So that could be part of it.
It's part of the premium wedge there.
Yeah.
Kent, last question from me. 3 gigawatts is really a tremendous kind of runway out in front of you. It's hard to put that into words. Lee, you and I have had the benefit of being to some facilities and witnessing just the scale of what we're talking about when you're discussing gigawatts. Before you jumped on, Kent, we were speculating around how is all of this going to be funded? What does that look like? We've discussed here share prices are running. Market is starting to recognize that on the equity side. What have you heard, or can you shed any light or give expectations around the funding and how this CapEx is met from debt markets, maybe more corporate bonds, off balance sheet or special purpose vehicle type financing? When we're talking about hundreds of billions, it feels like people are going to start to get creative. That can be a good thing. It can certainly be a bad thing as well. Just curious for your perspective on that as we see all these headlines come across our desk of just incredible outlook on CapEx outlays.
Yeah, no, that's right. I mean, what I will say overall is like there is no shortage of capital looking to get into this space. Everybody wants access and exposure to AI, and there aren't very many pure play exposures you can get.
Right.
Obviously, the hyperscalers are all out there, but they've got an enormous number of other things within their business other than just AI.
Mm-hmm.
There are the couple of pure exposures like a Nebius or a CoreWeave, and you've seen them perform very well and be able to raise large sums of capital. I think for us specifically, we have access to a number of different capital pockets by virtue of being a listed company. So we've raised close to $1 billion in the convertible debt market, as an example, over the last 8 months. That's a market that remains extremely strong. As part of our recent GPU purchases, we were able to get 100% financing of a couple of the orders that we put in. So that's, again, very attractive debt terms, 24 to 36 months with options to purchase the equipment at the end. So they're structured as leases. Aside from that debt, we don't have any other debt within the business, and a very large tangible asset base now with all of the data center infrastructure and other GPUs that we have within our operating fleet. So that gives us a large range of possibilities, whether it's additional secured debt financing either at a corporate level or an SPV level, whether it's additional equipment financing, convertible notes, other forms of corporate debt. So, we do have a lot of access to capital as we go down this path of expanding out our fleet.
Well, can't we look forward to seeing you in Dallas to do some of that fundraising? I'm sure there's a lot of people here that would love to invest in Texas and making Texas a leader in this industry.
Yeah, absolutely, and we're certainly active and talking to a number of investors in the Texas market. So it's a fantastic place to do business, and we're extremely happy to have our major facilities located in Texas, and look forward to lots more growth to come.
All right. Well, that's Kent Draper, Chief Commercial Officer at Iron Energy, with a fascinating discussion. And I'm sure we'll revisit it from time to time here on the show because it hits on a lot of the topics that we care about.
Absolutely.
Energy, Bitcoin, Texas,
Can't miss.
AI. Yeah, you can't miss.
Kent, thanks for your time. Keep up the good work.
Pleasure. Thanks very much for having me.
Sir. Really a cool discussion. Awesome company. I'm surprised and really encouraged, I guess, by the availability of capital that you're talking about. Lease terms for 100% of the capital cost of equipment with an option to buy at the end.
I'm assuming NVIDIA is giving them those terms.
It
right?
must have been.
Yeah.
It kind of goes into no-brainer territory there, but I guess it shows the point he was making, which is that's actually not the bottleneck anymore. We used to hear a lot, there's no chips. That's the bottleneck. Well, we've shifted now to land and power.
Mm-hmm.
And if you've got the land and power, you're going to see that reflected in those very favorable financing terms to deploy hardware where that land and power is. Really enjoyed that.
I thought his most salient point was, so some of these other hyperscalers that are pure play AI, with $1 billion in the pipeline, trading at a $20 billion market, that's Nebius, and then 2 gigawatts in the pipeline, trading at a $40 billion, that's CoreWeave. They have 3 gigawatts with about a gig operational, but 3 in the pipeline, trading at a $7 billion market cap.
It's really remarkable. 3 gigawatts is just hard to describe how much power that is, but they have a great facility kind of towards the panhandle here in Texas, and it's windy there.
Massive, yeah. There's a lot of
anyone who's been there knows it's real windy, and you can get that kind of power in a way that is very difficult to find anywhere else in the world.
Yeah, and I think people need to understand too that this is, power is not a zero-sum game. It's locationally stranded oftentimes, time of day stranded.
That's right.
I mean, there's so many reasons why we should be using power in far-flung parts in rural America, because you just often can't get that power to the population centers. And that's sort of the flip side of Kent's thesis about, urban constraint. You can't build data centers in urban areas because
they had that vision.
There's not enough power and there's not enough real estate.
We know it. Yeah, you see it here in Dallas. I mean, they're just running out of land to build these massive campuses. Amazing vision. Yeah, definitely someone we'd want to have back on. Really, really interesting to follow that story. Let's keep moving. I want to bring us to the jobs report, and we're going to kind of go back to the All In Energy podcast. By the way, worth mentioning, one of the big sponsors of the All In Podcast Summit, which is happening right now, Iris Energy. So they're everywhere, everywhere you can find them growing. But I think that part of the discussion that I thought was worth sharing around that same group from the All In podcast was relative to this jobs report issue. It's about a 2-minute video. I want to share that, and I think it brings an interesting perspective to this and what we've seen in the headlines.
Today, some big news came out Friday with the soft jobs report. Pretty much bad across the board. Jobs came in super light, 22,000 added versus 75,000 expected. Most of the gains came from part-time jobs. U.S. lost 357 full-time jobs while gaining 597,000 part-time jobs last month. And this is after a bunch of revisions. You guys remember we talked about here a couple of times with these revisions, and we'll show up some charts with long-term revisions. July revised up slightly by 6K, 73,000 to 79. In June was revised down significantly. Remember that impacted the market by 27,000. This makes June the first month with a net loss of jobs since July of 2021. So there's an account on X, Covisi letter, and they did this revisions chart. It's pretty crazy, as you can see.
You can't run the most sophisticated economy in the world if you have data that is completely unreliable in either direction. And so the problem with this jobs report is there are already two competing versions of the truth. One group of people are trying to paint the jobs report as everything is working, there's nothing to see here. Another group of people are saying, oh, well, hold on, there's a births, deaths number where if you extract that out, the jobs numbers is actually negative. I don't know which one is actually better in terms of where we want to be right now going into a rate cut cycle. So my general commentary is the following. The BLS and their approach is incredibly brittle. It doesn't work. I think Commerce has taken the first right step, which is to start publishing useful economic data into the blockchain. I think we need to figure out a way, and this is where Congress should get their act together and pass an incentive or a requirement for certain parts of the critical economic infrastructure of America to report their data in an anonymized way into a broad set of blockchains.
So let's break this down, Lee. And as a precursor to that, one might ask, why is this jobs report really that important? It comes as a headline, it goes away. What I'd like to highlight is we still have a dual mandate at the Federal Reserve in terms of rate setting policy tied to inflation and also to employment. And one of the main inputs around that employment discussion are these jobs reports. Interestingly, in the last election, I think it was Vivek Ramaswamy most notably kind of made that a political issue, saying, why is the Federal Reserve contemplating employment issues when it should singularly be focused on inflation? I'm inclined to be sympathetic to that view, but as it stands today, you still have the dual mandate, and that's why I think the perspective here is important. Whatever you think around whether we should have a 25 basis point cut or 50 or stay flat, what I think is indisputable at this point is that the jobs data is, if not subpar, approaching unusable, because you have these revisions that literally took it from adding jobs to now negative. If you can revise that, you get to a point of why are we even publishing this if you're going to have that kind of fluctuation. Chamath then comes, I think, and makes sort of a prescient prediction really around a solution, which is let's have more of a market aspect here. Instead of a singular entity that just publishes something, we can have data released through a blockchain or blockchains to the public more at large and allow for a distributed opinion to form around what that data is, so you don't have this sort of single source of truth that ends up not being
True at
the
all.
truth. Of course, just 10 days ago, I think we saw the first GDP numbers that were published to the blockchain. So this is quickly going from sort of, let's talk about it on a podcast, to very real. And of course, Chamath was a person who was just in the White House. So I think that this is an opinion that we should kind of seriously contemplate. I struggle to see how we don't move in that direction.
Yeah, I mean, if we think about kind of the Kalshi poly market, prediction markets, sort of decentralizing this, there's a lot of people that have information out there, and we want them to collectively bring their information to the fore. And how do we incentivize them to do that? I think we're using a lot of different things here. We're using economic incentives. We're using sort of, I hesitate to say the wisdom of crowds, because oftentimes the wisdom of crowds is not.
The
but
tyranny of a majority is possible as well.
Yes, exactly. but I think what we are saying is there is the ability for different actors to have a incentive to provide accurate data in a decentralized way that is codified on chain somewhere. And certainly the Bureau of Labor and Statistics would still have a role in that, I'm sure. But I think they've proven to be a little bit inaccurate, and that's just a function of trying to get data out monthly, and we're always kind of revising and backward looking, and I think in today's age we have the technology to get that out there more accurately and timely. I think what they're struggling with an optics problem is, because historically they've just said, hey, we're going to get the numbers out there and just be aware that we're going to revise it.
There wasn't an alternative.
Yeah, there's no alternative, and people are just comfortable with that level of accuracy.
Yep.
But I think what we're finding now is that level of accuracy is inappropriate in the 21st century.
I'll even go further with this. If it's onto this, I'll say that one of the companies that I'm working on, we suggest using AI to sort of gather public information from public databases for finding a specific clientele we want. And it's the same sort of thing here where the information is not updated often enough, and it's not accurate enough to have real-time information. Unlike with using blockchain, to your point. So, it's slightly different context, but the same functionality where, we don't have real-time information that's fast enough and accurate enough to make those assumptions. It's kind of what, it's also kind of what Larry Ellison talked about when, compiling all this information into, sort of one major AI hub, which is what the gentleman on the podcast talked about. When it came to compiling onto one specific blockchain.
Yeah, I think that's well said, Bryce, and JBA, and I'll kind of add a comment onto it, which is we're at an inflection point with blockchain technology and AI where we've grown up in a world where you can pick your topic, whether it's customer data, labor statistics, whatever it is, and there's some list of approved experts, and they publish whatever that report is, and that kind of becomes the thing that we reference. It's disruptive to go through a process of retiring that, and it feels like something that it happens gradually then suddenly. We've kind of heard the cliche. I think we're entering the gradually trajectory where this opinion is going to be more widely shared of, hey, why are we doing this? Is there another way that we can do this?
And can you run them parallel for a while?
Can you run? And that's gradually, and then you reach a point where everyone just kind of realizes it doesn't really matter what the BLS report. They'll change it next week. They'll change it the week after that. Let's come over here to
the market,
and we'll just see it there. When that happens, I don't know. It's interesting to think about it, though. Now, each report that comes out, I think this is gonna resurface as a part of the discussion. Any way you slice it, the jobs data out there right now is not good. It would seem to portend that the 25 basis point cut at the Fed that was, approaching a certainty seems a certainty at this point, and maybe even 50 basis points is in play. JB, I don't know if we can find the latest kind of market reactions around 25 basis points versus 50 basis points, but in the absence of the blockchain sort of mechanism that we're talking about here, this is probably the best reflection of where the market might go as we are we're approaching closer and closer to a moment where the Fed's going to have to make a decision, and this jobs data is something that drives that. Do we have any kind of latest market intel around?
Yeah, I think we have it from Kalshi. JBA is getting it pulled up now, and the beauty of these prediction markets, Kalshi and Polymarket, you were saying earlier, typically, even I would do this. I would go listen to economists in the Wall Street Journal and say, what is their tone? And they'd say, well, it's likely that there's going to be a 25 basis point cut this month. Or,
right.
In years past, you would just have to go to these few trusted voices and, based upon how they were feeling any given day, they would use words like likely or, it's probable that, and they were always hedging their bets too. Now you can get real market intelligence, very granular intelligence about what's going to happen. And of course, there's they can be wrong. The market can be wrong, but certainly, you have that data to go off of, and it's more accurate than this economist at Harvard feels this way. And so Kalshi and Polymarket are the only two prediction markets authorized in the U.S. Looks like we've got Kalshi pulled up here, and I'm seeing is that a 75% chance of a 25 basis point cut?
79.
79. There we are. We're zoomed in a little bit now. And then what else are you seeing in these numbers, Bryce?
Yeah. So I mean, for 25, here we go. Yeah, we have 79. And then for a less than, it'd be 16. I mean, I think it's obviously we'll all say that it's about time that it happens. Of course they didn't ask me, so but at some point it's got to happen. I remember when I was watching the meeting with Trump when they're looking at the build site for the new Fed buildings, and Trump's the kind of guy that I feel like I'm waiting for the big reveal on this particular subject. It seems like every time he has a speech or he's doing something, there's always like this big reveal Trump always kind of has. So I don't know. It'd be interesting to see what happens.
Yeah. So we got 79% chance of a 25 basis point cut, and then looks like a 16% chance of a larger cut.
Lower than I would have expected, given this jobs market kind of noise. But I think it reflects a broader expectation that the Fed is very reticent to cut.
And they're gradual, yeah.
And it's been very political. Obviously, Trump's been pushing for more cuts, and Powell doesn't seem to want to do it. This will heat up as the day nears, but there's no way to look at that recent jobs data any other way than negative. And everybody's prescribing their different political reasons for that. It's not hugely negative, but it is a negative. It's a story I think will continue to play out. But interesting to see that at least right now, I don't know, if you had asked me, I would have said it would have been 30% chance maybe for a 50 basis point cut, and you're sub 20%. So
I'm going to be a little controversial here and say that don't think that we need a 50 basis point cut here. I think 25 basis points is sufficient, mostly because it would spook the bond market too badly for a 50 basis point cut.
Yeah, I think part of the argument for your case that I think is very valid also is, look, the market is ripping right now.
Yeah.
Is it really a time to kind of ease?
You don't need to ease.
Pour gas on the fire, so to speak.
If 50 basis point cut could lead to inflation, it also could lead to sort of a inability of the bond market to take all of all that debt on.
Yep.
So essentially, you could see the 10-year and 30-year Treasury get way out of whack between what the Fed, overnight lending to the SIB banks is going to be, which is kind of a dangerous place to be. When I think that's what Powell is most concerned about is, will people still be buying these long-term Treasuries, if we cut our overnight rate too much?
Right.
It's,
Yeah, I think you've made a good argument, and pretty soon we're going to know. So right now it looks overwhelmingly like you're going to be right. Let's move on. Interesting deal, big headline, and it's someone we've already talked about today, and that's Nebius. Nebius, a European-based company, I think Dutch-based, that not too long ago made an entrance into the U.S. market. Their biggest investment in New Jersey, as Kent from Iris mentioned, about a gigawatt ultimate build out that they're targeting there. So the big announcement is a deal with Microsoft, a 5-year partnership providing Microsoft with dedicated compute capacity, $17.4 billion in that contract through 2031, and could go up to $19.4 billion. Microsoft has that option to expand a little bit there. I think Nebius shares today, let's have a look, they were up over 50% in the pre-market. And I'll just have a look here.
And Bryce, if you want to pull up the Nebius shares,
up about 43%. So huge run up. Nebius, kind of not a very well-known company outside of maybe small circles investing in the space. Now they're going to be well-known. Interesting as well, this is not a cash infusion from Microsoft. You have a partnership. So Nebius can go out and pursue financing. I would imagine a lot of lower cost of capital, debt financing.
Microsoft does it.
They have kind of an investment grade off-taker. Of course, we've seen a similar kind of arrangement between Microsoft and CoreWeave. And so this is sort of the playbook that it looks like the hyperscalers are going to have to pursue, which goes along perfectly with what Kent was saying earlier, that land and power is the bottleneck. If you want to build greenfield, that's a 2-year timeline, right? Versus a Nebius has something ready to go, and Microsoft is going to lean into that, and looks like they've leased up pretty much all they could get, and the market's loving it. So
there's a lot of dry powder with the hyperscalers. I mean, Google, AWS, there is a potential for other big announcements like this, I think. Microsoft even could, but they've announced several large ones, of course, with their alliance with OpenAI and the CoreWeave stuff, but we're not really hearing much from some of the other, and Meta as well.
With that,
where's the 600 billion going to go? It's not going to just go in their own data centers only.
That's right, and it's certainly not within the time frame that they've laid out. And here's Microsoft kind of putting I think a base under that, saying, okay, 17.4 billion commitment. Everybody else is going to be looking to do at least that much to kind of stay in this arms race. It's interesting you compare them to CoreWeave, one of the year's biggest IPOs, one of the tightest partnerships with Microsoft that we've seen. I can't remember exactly, but it is more than 50%, I believe, of CoreWeave's capacity is dedicated to Microsoft. And they've traded a little bit off of the big IPO high. So CoreWeave's actually down over the last month, and Nebius now, significantly outperforming there. But that kind of pure play AI infrastructure company is the top target right now for these hyperscalers. Big deal. Will be interesting again to see what does that follow-on financing look like. You kind of get this headline. That's a lot to go and raise, 17 billion to ultimately, deploy all of this. And can a European recent entrant scale up and meet that challenge? I'm sure Nebius will be looking to confirm that in fact they can. We'll have to reach out. We'd love to have them on the show. It'd be interesting to get a little more color shed on how all of this came together. But you see, Australian company in Iris, European company in Nebius come into the U.S. The U.S. is kind of this top jurisdiction for the hyperscale, mega campus AI data center build out
for multiple reasons.
Energy
capacity, and also, the wealthiest 25% of global GDP, which means you have the highest, aggregate usage of, per capita usage of AI compute and inference compute.
Interesting stat here.
A lot of reasons.
Over the last month, S&P 500's up 1.6%. About CoreWeave, as I was mentioning, kind of coming off of that IPO
down 30%
run up.
Month,
they're down about 25%. That's right. And then Nebius up 40% today, and over that time frame up over 34%. So you're seeing a kind of decoupling there, given how much is dedicated and the ramp up that the market can kind of price into that valuation. So we'll continue to see that. All right, so we want to keep moving here. Let's see.
Mistral and ASML.
Let's go to the Mistral deal. So similar, we have some news from European companies,
which is rare,
which is very rare. One could argue that Mistral, AI developer, very open source focused, French-based investment from big American firms. I think A16Z is in the deal. I think Google put some money in as well, but it is a French-based firm. So Mistral here announcing a 1.7 billion euro. I'm not used to quoting things in euros. Raise most of that, and I think this is maybe the real news here. most of that Series C funding round is coming from ASML. ASML is probably the most consequential European-based technology company. They are really the monopoly in advanced lithography technology.
Yeah.
And
For those who don't know, tell them what lithography is.
it's a key part of the semiconductor manufacturing process. And they are particularly most dominant in the extreme ultraviolet variation of that lithography technology, basically the projection of light onto silicon to form a semiconductor. And remarkably, they started in 1984, and nobody has been able to, viably compete against ASML, and they are the key provider of this to the whole world. Of course, there are some Chinese companies that are out there trying to ramp up and meet that. I think the question around the Mistral alignment is how does this make sense? I come from the oil and gas industry, so I kind of think of it in this metaphor. It feels like if a rig manufacturer or a company providing components to the drilling process were to say, well, we're going to go and buy the gas station, which is kind of the end provider, there's a fair amount in between there of value creation. I'm struggling to see exactly how that pulls together. I'll read a quote from their press release. The collaboration between Mistral AI and ASML aims to generate clear benefits for ASML customers through innovative products and solutions enabled by AI, and will offer potential for joint research to address future opportunities. So that's a little vague.
Yeah.
Joint research to address future opportunities. The question there is ASML eyeing getting involved in more of that
end use
kind of value chain? They're way upstream in providing lithography to the TSMCs of the world.
Samsung, and
now they're getting into Mistral, who, and in my estimation, is all the way at the end of that value chain, providing products that enterprise customers are using primarily in Europe. But they do open source their models, and I respect that, and I commend them for that.
I have two ideas as to how ASML is thinking about this. One, and if you're, we'd love to have the CEO of ASML on the show.
Certainly.
So we would get straight from the horse's mouth. But one is there was probably a lot of pressure from European governments for this to happen because they've fallen way behind, and the only way was for Mistral AI to get this capital injection from one of their stalwart champions in ASML. Also, in the middle of that value creation, ASML providing lithography and these super high-tech machines that can cost, tens of millions of dollars per machine, being purchased by Samsung and TSMC and various companies that are, developing semiconductors. There's only two. It's sort of a duopoly, right? You have Samsung and TSMC, and then everybody else.
Yep.
And almost nobody else is even close.
Right.
So they're almost like utilities at this point, Samsung and TSMC. Of course, they're not, but there's only two of them. So I can see why they could think we have a channel here. And by the way, Samsung and TSMC buy ASML. It's not like they have a competitive relationship with ASML. So I could see ASML being able to hey, we see through both of our, mid-value chain partners, and certainly, of course, NVIDIA is in there. Mistral AI is using likely NVIDIA chips.
Very much so.
That were likely, TSMC foundered,
right.
I would assume.
It's all a chain here.
It's a chain. So I don't know if it's too far-fetched for ASML to be like, hey, we see through all that. We're making this partnership. Mistral AI is going to be a competitor to OpenAI and to, Microsoft and to Meta.
It makes sense to me.
AI.
It makes sense to me every time I see a Mistral event or announcement or something. I feel like the French president, Emmanuel Macron, is like front and center and doing the photo ops and all of that. I think your suspicion that there was some government arm twisting to get a deal done is a good intuition. I'll read another comment from the press release here. ASML believes that working with Mistral AI will allow both companies to innovate faster together. This first of its kind partnership between a semiconductor equipment manufacturer and a leading AI company will bring their respective and unique competencies together. ASML's leading capabilities in holistic lithography, products, and services, along with Mistral AI's expertise. I note ASML refers to itself semiconductor equipment, not just lithography. So there is a vision there, I think, clearly to develop a bigger integrated European champion in the technology landscape. I like to see a partnership that brings more funding to an innovative company like Mistral. I like to see more investment in open source AI broadly. I've used the product. I don't use it a lot, but I have used it, and I think they're doing a good job and have carved out a place in the marketplace. So rooting for them and glad they're getting some headlines out of it.
That's a great deal. And of course, the French government could use the distraction right now with the no confidence vote in the prime minister, Macron trying to find another prime minister. You know, you can't even remember all the prime ministers' names because they keep losing no confidence votes. So
a lot of noise.
Lots of noise.
A lot of noise right now. Let's pivot. I've got a headline that I think is a big deal across the whole, really the cell phone space, and that's SpaceX and their $17 billion deal to acquire more spectrum from EchoStar. EchoStar is the holding company of the Dish Network and Boost Mobile. They'd been under an ongoing FCC investigation, really a lot of regulatory pressure around a lot of the spectrum that they had acquired through prior auctions, and they were not utilizing. They ended up they were over leveraged. They weren't deploying capital in there, and we're in this race, to accelerate technological innovation. And here you have an asset kind of sitting fallow. 10 days ago, I think about 2 weeks ago, you had a big deal announcement with AT&T based here in Dallas, about $23 billion deal there to acquire some of their spectrum assets. Now you've got SpaceX. This one's really interesting in the aspect that part of the deal itself is around allowing SpaceX to offer more direct satellite to consumer cell service. That would be a real game changer. I mean, we've all lived through you drive somewhere and you lose, connection. And to make that a thing of the past would be a complete market reorganization. I know SpaceX has had that vision for some time. They just haven't had the entry point. So much more to be heard on this.
But my one question for that would be, so the ideal customer for this would be someone in rural America who is not well served by, Sprint or AT&T. I'm assuming it's not like SpaceX is going to sell that capacity to an AT&T customer who's driving through Amarillo.
Well, no, I think you've got here. I'll read from this is from the Wall Street Journal. It says SpaceX said it would use the spectrum as a foundation for Starlink's direct-to-cell business around the globe. It could also share spectrum with telecom partners. The most valuable piece of the deal covers 2 license blocks that allow a carrier to provide ground-based 5G cell phone and broadband service in the U.S. T-Mobile is in talks to lease some of the spectrum rights that SpaceX plans to acquire, according to people familiar with the matter. EchoStar's latest spectrum deals respond to pressure from the Federal Communications Commission, which threatened in May to strip some of its valuable spectrum rights. And so I think you get 2 things from that article. You already see a major incumbent, T-Mobile, that recognizes at a minimum a threat. They would probably characterize it as an opportunity. And second, it mentions global service. That's where I would maybe see the biggest opportunity is if you can start to build more of a consumer brand, you can allow that globally, particularly for people that travel. My mom just traveled internationally, and she's like trying to get on Wi-Fi to call you through WhatsApp, so you don't get a $30 charge for connecting to the local. It's just a pain. If you had a phone that could go anywhere and was satellite, that would be revolutionary.
That sounds like 2025.
I think a lot of U.S. customers, corporate customers, would want that kind of just push a button, make it easy. And it looks like this is a deal that's going to get them a step closer to doing that.
Well, I mean, and I think this is probably Elon's, play the whole time. Obviously the bandwidth is not there yet with the ecosystem of satellites that are presently in the sky. But again, like all technology, it's bare bones at first, and then it gets better. At some point, obviously, how we, what AT&T and these other wireless carriers do will be obsolete, and there will be a new form of technology, and I don't think anybody's going to be Elon on that.
Yep. Yeah, I wouldn't want to be going up against Elon. And I got to tell you, some years ago, my first interaction with Starlink was one of those sort of, why don't we talk about this more moments. I was driving to the middle of nowhere, Texas, Bitcoin mining site, way out in the sticks, no cell service for 30 minutes at least driving in there. And I get there, they've got the Starlink out, everyone's working, all their computers are open, no problem. That was some years ago, kind of early days of Starlink. They were hard to get at that time. And I just saw that and said, this is absolutely incredible. I guess it gets overshadowed sometimes because you got Tesla and the Boring Company and everything that Elon's doing. But in terms of like broad mass appeal in the near term to the American consumer, a Starlink powered phone that works anywhere in the world. Wow.
Yeah. Powerful.
Yeah.
And they've got 8,000 satellites in the sky right now. Starlink does. And I'm asking one of my AI models here, one of my LLMs, how many satellites they would need to have the coverage capacity that, say like AT&T has.
Yeah. It's working.
It's
hard question to answer.
Yeah, it's a hard question to answer.
Yeah.
And it's different from voice to text, cell-like, so they've got 8,000 satellites globally.
Oh, I didn't know that. That's a lot.
They're estimating, you would need 7,500 in certain orbits just over the U.S. to compete with LTE.
Right.
So that's obviously that number is less than what they have globally, but that would have to be in certain orbits over the U.S. So
Yeah.
you probably have orders of magnitude more.
Right.
Well, and I don't think anybody's going to catch up with the sky. I mean, it's AT&T is, it's a great company, but it's old, and Elon's new, and he's gonna do what they are not going to be capable of doing. So
He's a disruptor, and now he's $17 billion into the game. So
yeah.
They're off and running. Let's move on to 11 Labs. This was one of these like really cool companies a while back. Came out with an awesome text-to-speech product. I used to play around with it. I'll be honest, I kind of forgot. It's like 100 different AI startups, right? I am amazed though at the continued growth trajectory in this company. And what's really cool is they just announced yesterday a $100 million employee tender, co-led by Sequoia and Iconic, at a $6.6 billion valuation. That's 2x valuation in just 9 months from their last Series C, as they continue to ramp up their annual recurring revenue numbers. This is also really cool because they've grown their team significantly. I think they said from 70-something people to like 300 or something like that. Big ramp up in headcount, a lot of equity being provided to employees. This is a really neat way that the investors have come together and said, we're going to give you a high valuation. We're going to also provide some liquidity
For
specifically for the employees.
Yeah.
In this landscape of, frankly, insanity in what you're seeing in terms of compensation packages for
And competition for talent.
AI talent, expect to see more of this. I think most other companies are seeing this come across the headlines yesterday and are feeling like we got to put something together. Not to mention, Sequoia's already invested in so many of these companies. So if they're setting a trend, a Sequoia could say, hey, company X, Y, and Z, this worked for 11 Labs. Maybe we consider a similar kind of setup. Nice way for the investors to get more exposure to an investment they like without going through the whole process of a whole other fundraising round. Feels like a win-win-win. If employees want to keep all their equity and ride,
They don't have to.
they have that too. What's not to like?
What happens when, so this is a $100 million tender offer. What happens if only a few employees take them up on it? Is it the rest of the market then get access to it?
Didn't disclose all those terms, but I suspect it's just internal to the employees. It's kind of take it if you want it. And I would also suspect it's not a sort of all or nothing proposition.
Got it.
I would also bet that the 100 million is probably already full, and people are gonna
probably
they're gonna take it and
And I'm sure it's not one of those things where there's like a holdout who could get a higher valuation.
That's right. It's going to be mostly
a set valuation.
employees.
Yeah.
I suspect it's targeted at more the general employees, not like the co-founders
Yeah.
that would probably hold on to most of their equity. But that wasn't entirely disclosed.
Yeah.
The type of structure that this puts forward feels like probably a new standard operating procedure for a lot of companies. And hey, it gave me a reason to go check out 11 Labs, and man, have they expanded that offering. They've licensed like Burt Reynolds' voice, different
which is a great voice.
celebrities with classic voice. So you can do a whole story with that voice. I may have to pick up that subscription again because it did look kind of cool. JB, I think you said you were using it, playing around with 11 Labs for one of your startups.
Yeah. So utilize, there are other tools, but 11 Labs is sort of the A standard right now. And, we utilize that to clone clients' voice to automate, outreach and lead gen and that sort of thing when it comes to operating their phones.
So like their AI twin is able to connect with a customer or potential customer.
Absolutely.
More accurately.
Yeah. So I'll give like an example. This is not one I've done, but other people I know. So if you have a nail salon, they can automate all their phone processes with having an AI person answer the phone, schedule the appointment, put it on the calendar.
It sounds like one of the
and you won't know it's AI. It's that good. You can also take clients I have specifically where their clients may know their voice. We can clone their voice and their intonation, and that their clients won't know they're not talking to them unless they ask them specific questions the AI isn't privy to. Which goes back to our question about knowing live information earlier. But yeah, it's pretty cool.
Do you think most people will want to inform their customers that they're not talking to? I mean, if I was a business owner, I might say, hey, you're interacting with my AI twin right now. And if you have specific information for me, shoot me a text.
At least in Texas, I can tell you the new law for government services does require that.
Disclosure.
Yeah. So any kind of, you call into any kind of, whether it be city, municipal, state service, and they're using either a chat bot or one of these voice functions, you have to have a disclosure.
Yeah, it's one of those things. When I say they won't know, it's just that it's so good. It works well. I mean, there's something that there is a lack of regulatory clarity on some of how that's going to work.
Yeah.
I'll bring up is another related topic that, if you can go on Spotify right now and you can find a plethora of bands that don't exist. Like that's slightly different, but it's kind of related
wild,
to the topic.
Like AI spoof bands.
Yeah, you could have a guy in his basement and become extremely famous from being a musician and not know a thing about music. It's really, really quite an interesting time. So
that's wild. I didn't know that. I'm not as plugged in, I guess. Thanks for the perspective, JBA. Now, for some people, you may have recognized my Texas A&M hat. Proud Texas A&M Aggie here. Big game on Saturday against Notre Dame.
Yep.
And I wanted to take some time to talk about one of the hot kind of economic subjects around college football, and that's name, image, and likeness deals, or NIL, as it's broadly referred to. There's some fireworks over the weekend. You had Cody Campbell, who's a trustee at Texas Tech, very successful oil and gas businessman, and also involved with the Trump administration around this issue of NIL, who made a public post around a TV ad that the SEC conference ran during football games, basically saying support the SCORE Act, which is a law making its way through the U.S. House of Representatives right now. And they were representing that all conferences accept this, more or less, this is everybody's on board and you should join along as well. Kind of blew up in their face. He posts here, it's got hundreds of thousands, if not millions of views at this point, saying this is not true. In fact, the large majority of conferences and their members, including many members of the Power Four, believe that the SCORE Act needs to be amended and modified so that women's sports, Olympic sports, smaller schools, and the student athletes can be protected and represented in the final solution. So what are we talking about here? College sports, particularly football and basketball, has just become a huge industry.
Yeah.
And with the advent of being able to pay players through NIL, you have more and more brands where a central piece of their marketing strategy is in college sports. And instead of just running ads as they used to during the game, they have NIL deals with the athletes where they're doing co-branded type of stuff. But what you've seen is a very uneven distribution of rewards. Not surprising. The quarterbacks are going to get the most money.
Mm-hmm.
Now, that's never going to not be the case. I mean, that's the case in the NFL or really in any sport. The star gets the most money. But in NIL right now, I think you've seen really a pretty egregious difference. Where we're really seeing some fireworks here is the biggest conferences, and the SEC and the Big Ten are by far the most, the most profitable, biggest conferences. They want to retain their conference control over their branding and their TV deals. Basically, the money flows into the conference. Then you've got an initiative from people like Cody Campbell that say we should have a more national solution. If you're playing to be the national champion, then the national landscape of teams, schools, and athletes should participate in the financial rewards, which primarily are derived from these massive TV contracts. And I want to highlight a particular case here around kind of the corporate involvement in this. Oregon has basically become, Oregon football, Oregon athletics, has basically become like a subsidiary of Nike. Phil Knight, the Nike founder, was an athlete at Oregon years ago. And you can't begrudge the guy having some school spirit. But at this point, they're spending, by some reports, over $40 million a year.
In NIL deals?
Just on their football roster.
Wow.
In NIL deals, which are overwhelmingly dominated by Nike. You had them playing Oklahoma State this last week, and the coach of Oklahoma State actually called this out. He said, we spend about $7 million a year, which is not nothing. Difficult. Oklahoma State doesn't have a Nike, and you're going up against a team with basically unlimited resources. The Oregon coach comes back and says, you're whining and complaining, and we're just investing in our team, and this is perfectly allowed. And I don't think anybody's debating whether or not this was allowed. This is perfectly legal right now, which is creating this arms race. So you get to Saturday, Oregon wins 69-3. They scored 56 points just in the first half. So I think we got to take a step back here and ask ourselves, is this right? Is this how corporate branding is going to work in the future? I don't have every solution, and frankly, Texas A&M and Notre Dame, who we're playing on Saturday, probably stand to win in this current system, where the 15 schools with the biggest budget are going to get all of the players. But I'm also an American who cherished the uniquely American feel of the college athletics landscape, that it feels like we are losing. Now you're seeing it become a big political issue. Cody Campbell, influential within the White House. This isn't going away. So expect more headlines. Expect companies like a Nike that are increasingly involved with this kind of marketing to potentially get dragged into some of this debate around what does this do to your brand value, really, if you're involved in college athletics at this kind of level.
Mm-hmm. It's perfect timing. Of course, NFL season kicked off last week. A lot of great college football games as well. And, it's big business. In college football, it's estimated that if you add up the TV deals, the ticket sales, all these kind of things, we're talking about a $40 billion industry.
Amazing.
It's a huge industry. A lot of that being the TV deals. But the NIL component in the last 3 or 4 years has become an increasingly important part of that. And I do agree that you're going to have this sort of capital and talent will flow simultaneously down the path of least resistance to these top 15 programs nationally, like UT, Oregon, A&M, Ohio State, Alabama, where the alumni base is just funding sort of unlimited pay packages for coaches and also funding, corporate through their companies, in all likelihood, corporate sponsorship.
That's where it does become a corporate thing.
Yeah.
I think more and more companies, particularly public companies, are going to see some pressure to weigh in.
Yeah.
I think you've got broad alignment that these payers should get something. The era where you would have multi-billion-dollar brands and the players get nothing,
that was wrong,
is behind us.
Yeah.
And was wrong. I would agree with that. What we have now, though,
swung the pendulum
is also wrong. Where
a little bit too far.
you have a Wild West. I think that's the way the Oklahoma State characterized it, and I would have to agree. This is Wild West, and it's corrosive to the game to have that kind of financial. In the NFL, you got salary cap, you got regulations around transfers and all of this. So expect to see some of that make its way down.
A potential policy solution might be to require that a percentage of every NIL deal go to the conference at large.
I think that's the closed door thing that's going on right now.
Yeah.
Is who's going to get what here, but that the SEC and Big Ten come out of this unscathed and get away with the massive TV deal, and they basically keep the whole thing, doesn't feel like that's going to be politically viable.
Yeah.
If you just look at a political map, doesn't feel like that's going to be politically viable. A lot of legislators are already piling on to Cody Campbell's post saying, I support this. You're right. We need to amend the law. So I think it's a big loss for the SEC, at least in their government relations program.
I mean, I don't know that there's any disputing the fact that, if I'm making an obscene amount of money for a university, I should get paid for that 100%. I think the one problem that we're having with the sports side of it is, a player can transfer instantly anywhere they want to go. And you can't even form a cohesive team. I mean, if you look at like how many times star players have past couple of years where it's like, oh, I want to move to this school, and you can't have this. You go in as a freshman, and okay, we're going to build this team. And over a 4-year time period, you have this story and this, and it's just like, you can't build sort of cohesiveness around a team anymore. Now, I will say the NFL is getting a lot of value out of this, and the way they are is, you're having a lot more resources being put into these future talents that you're going to eventually, draft in the NFL. And so that's a lot of time and energy and money that you're not spending on training somebody that somebody else is, particularly when, if I was an athlete, I go in and I would just go 5 years. I do a 5th-year senior and milk it for all I can do. I mean, why wouldn't you do that?
Right.
And that's a whole other year of expense and time and training the NFL is getting in these players that they weren't previously. I think that's another piece of that everybody's sort of winning on this, except
small schools,
the small schools and the culture building.
Good comments. So we have an alignment. The status quo will not stand. Where we're going, we don't know. But I do think that brands are going to have to contend with this more. So the hat's going to come off, but I will say gig 'em Aggies.
Gig 'em. And okay, so we're talking, earlier in the show, we were talking energy. And we're going to come back and talk energy a little bit here because we have Reed Clay on, who is the president of the Texas Nuclear Alliance. Nuclear energy had a bad rap there for a few decades.
Undeservedly.
One of the safest forms of energy out there. And we cannot meet our energy demands without an all of the above approach that includes natural gas, nuclear, wind and solar, batteries, every form imaginable. Hydro. I didn't mention hydro because we don't have any in Texas. We have like less than 1% of our Texas grid is fed by hydro. But Reed, thanks for joining us. Tell us a little bit about the Texas Nuclear Alliance. What are you guys trying to do?
Yeah, absolutely. First, I thought maybe I was on the wrong broadcast at the beginning, but since we brought up NIL, I did want to point out that I agree with where you ended up. I didn't hear the beginning of the conversation that the losers are small schools like my alma mater, Wake Forest University, who really do have trouble keeping up with the bigger schools. So, but I was interesting to hear you guys talk about that. Definitely kind of the wild West, and we'll be interesting to see how they put that genie back in the bottle. But nuclear. Yeah, look, I mean, I think what you guys said at the outset is, both correct and unfortunate. Sort of had an unfair, bad rap for many decades. Essentially we put our nuclear program, which began in earnest after, World War II, with, Atoms for Peace, and became the undisputed leader in building nuclear energy throughout the world and really developing that technology and exporting it, frankly. And that all, was on hold for 3 or 4 decades. And I think, Texas is a great, and I know you guys know this very well from, all of our other discussions over the past few years. Texas is an incredible microcosm of, what's happening around the country and, and frankly, the Western world, which is, we have put a lot of eggs over the last 20 years into the renewable basket, trying to solve the, carbon emission problem. And we've done that, by focusing, almost exclusively on wind until, very recently solar has, really taken hold. And if you look at ERCOT in particular, most of the new generation prior to 2020, the net new generation prior to 2020 was wind. And basically what we've seen is, reliability and price spikes as a result of, the generation mix becoming very reliant on, wind in particular, but also wind and solar. And, what the struggle we now see in Texas and a lot of other places is that, is the wind there to take the handoff from solar, in late afternoon in August and July and the hot summer months. And we're struggling with that. And, I think what the Nuclear Alliance is all about is sort of trying to recognize that the bad rap that nuclear had over the past, few decades was unwarranted, and, based, more on myth and fiction than it was fact. So we're trying to bring some facts and education to that, and also helping folks understand that if we had never stopped building nuclear, a lot of the reliability issues that we're now facing may not exist, and simultaneously, our carbon footprint would have been, in a much better position as well. And so, what we've done is, started about 3.5 years ago, kind of in the aftermath of Uri, with the recognition that we, never should have stopped building nuclear, and, bringing to bear the understanding that, the industry didn't have an organization in the state to really, stand up to, the myths and fiction that have been thrown at it, and deciding to bring the industry together to combat that. I'll tell you, just the rapid growth mirrors the rapid acceleration of what's going on in the marketplace. We ended 2023 with 0 members. I mean, for all intents and purposes, was the alliance. We ended last year with about 24 members, and we are on the verge of surpassing 70 members through the first 3 quarters of this year. And again, that's a testament to just how fast things are moving on the nuclear front. So that's kind of the skinny on the alliance.
Reed, I love to hear it, and the growth doesn't surprise me. We've been going through a discussion today around what we think is a clear consensus that's being formed, at least by the Trump administration at the federal level, which is technical supremacy is a primary national security issue. AI is one of the key components to that technical supremacy. Energy is the key component to delivering the AI to deliver on the rest of the promises that we need to keep the country safe and prosperous. And it's been a clear shift at the federal level around, I think, being pro-nuclear, pro all of the above. What we haven't discussed as much today is the state level. So I'd like you to give us a little bit of that contrast, what your experience has been. I know the state of Texas now has a nuclear fund of some sort that you could probably touch upon. To what degree does the state lead versus the federal? They work hand in hand. Help us understand how we use all these tools and deploy the resources that we need.
A lot to unpack there. A couple things. I'm going to touch on your comments at the beginning first, and then answer your question about state policy. How you just articulated what's happening at the national level is not only is it very correct, but it's very important. What we like to talk about is that we've got to win on AI. I think there's a clear understanding, and frankly, I think it's a bipartisan understanding that if we do not really buckle down right now and make the strides that we need to do with respect to artificial intelligence, then we are a serious national security threat. And the biggest bottleneck in that entire thing is power. And that is why I think you're seeing a bunch of focus at the federal level on nuclear. I think, what we like to say is that, if you solve the nuclear problem, you're also solving the AI problem. So you're solving kind of two national security problems at once, because, the other piece of this is that over the last 30 years, we have really lost our mantle as, the sort of leading nuclear technology innovator and exporter in the world. And that's now Russia and China, which in and of itself, even separate and apart from the AI discussion, is very problematic. And so, we like to say we can solve two problems at once by investing in nuclear. And I think, it truly is a national security imperative at this point, and certainly an energy security imperative as well. So, and not just for us, but for the developing world that, like I said, is seeing much heavier involvement and intrusion by China and Russia. So in terms of state policy, look, a couple things. One is, we just talked about the magnitude of the problem, and the magnitude is enormous. I mean, we have got to build a massive amount of energy. The Trump administration wants to triple nuclear capacity by 2050. So we're going from 100 gigs to 400 gigs. That is a massive number. And just to be perfectly blunt and frank, that is going to require a very big investment from the federal government. And I think we're on the verge of seeing that. We've seen some executive orders that are already paving sort of the regulatory environment to accelerate this. But ultimately, it's going to take an investment. And I think, as we just discussed, the national security imperative, and I think the bipartisan support is there. What we're trying to do in Texas is make Texas, it is the energy capital of the world. We lead on, oil, gas, wind. We're nippy on the heels of solar. And the one thing that we, do not, sort of hold that mantle is nuclear. And the reason that, we have pushed very hard for Texas to lead on incentivizing nuclear to be built here is, two things. One is, we need to push the industry down the cost curve. Right now, nuclear is expensive to build. There's lots of studies that demonstrate that as the industry sort of reestablishes itself, that cost curve, bends pretty substantially. And so an initial investment is meant to push and accelerate the industry down the cost curve. The reason that we're doing it in Texas, obviously, is that we're proud Texans, and we think that Texas has some built-in advantages. A great regulatory environment, both from an environmental safety perspective and a workforce perspective, and frankly, a tax perspective. But also, we need to solve the economic development problem that's facing the state, which is energy constraint. And pushing the industry down the cost curve sooner helps to solve that economic development problem. So that's the primary reason we're doing it. The upside of that is, because the industry has atrophied for so long over the last 2 to 3, 4 decades, it's going to have to really regrow itself and establish itself if we're going to get to 400 gigs by 2050. Rapid growth, rapid investment, hundreds of jobs, billions of dollars in investment. And the state that decides to lead and become the early adopter of nuclear is the state that is going to own the lion's share of that economic development opportunity. And so we're trying to use this HB 14 that we just passed this past legislative session, which injects $300+ million into an incentive fund to both drive the deployment of new nuclear reactors, but also the manufacturing capability to do that in the state of Texas, to incentivize that. That was an initial investment, like I said, of $350 million. We expect that, we will, come back and show the success of the fund and, continue to, push the industry down the cost curve with further investments by the state. I mean, you've seen other examples of this. The semiconductor fund that Texas started in 2023 was replenished again in 2025. And then, we're doing similar endeavors with industries like, space exploration and others. So That's really the purpose of HB 14 and what it's designed to do. Again, it's $350 million grant program. It's a reimbursement program that requires that developers meet milestones to protect taxpayers. It requires that they have skin in the game. Their own equity has to be at risk, and it follows the development process in a tiered way to make sure that they're hitting the milestones and the projects are progressing the way that they should. So that's HB 14 in a nutshell.
Great. We'll be keeping an eye out for announcements around HB 14 and the deployment of that capital, and hopefully spur more nuclear build out.
Yeah, we've got to build everything, and I'm excited to see some of the early wins with regard to an SMR that's going to be constructed. And is it the Rellis campus at Texas A&M? I saw some announcements about that about 6 months ago.
Yeah, I mean, there's we didn't even touch on this, but there's a number of different projects, from Abilene to Haskell County to Dow Seadrift site to ACU and their demonstration reactor with Natura Resources. But yeah, the one that you just touched on is basically a nuclear test bed, essentially, to deploy commercial SMRs, probably to power AI data centers right there at the Rellis campus in College Station. It's actually in Bryan, but at the flagship university there.
Putting the hat back on.
There you go.
Yeah, there it is.
Well, Reed, thanks for joining us. Reed Clay, president of the Texas Nuclear Alliance, talking energy. Tell me.
One last thing. I know I got to go. We're having our second annual Texas Nuclear Summit, which is modeled after the great work that Lee has done in the blockchain space. We're trying to nip at his heels and keep up with what he's doing. That'll be in Austin at the Fairmont Hotel, October 15th through the 17th. We'd love to see any and all of you there. Thanks for having me, guys.
Yeah, thanks for coming on, Reed.
Thank you, Reed.
Once they come, they go to TexCap, they go to NABS at SMU in Dallas, and then the next week we'll
come on down.
We'll send them all down to Austin.
It's going to be an active October, but that's the nice time of year in Texas. I mean, you want to be here.
The best month of the year.
Yeah.
Well, November actually could still be hot in October.
It's a contender. Well, it was great to have Reed jump on and give us that perspective. I think nuclear energy is such an important part of the picture for making Texas the #1 leader really in the world in energy, which, as we mentioned, goes downstream in all of these other critical technologies. We do want to keep that discussion going at the TexCap conference. Remember to go to texcapcon.com, texcapcon.com, register there October 8th here in Dallas. And as you said, maybe we can make it down to Austin for Reed's conference. The Fairmont's a really nice spot down there.
It is.
If you've been to that one, but it's a great place in Austin. So glad to see that kind of programming coming together from Lee or from Reed, I should say.
Now we can't close without the Steve's Texas top 5.
Yeah. So
are you one to? This is a segment that we should close with every week.
We should close with every week. I would tend to agree. We've been talking about just a succinct way to kind of articulate why we think Texas is the future of finance. So this is why Texas is the future of finance. The top 5. #1. Less taxes, less government. We have no corporate income tax. We have no personal income tax. Now, there are a few other states that do that, but we're, I think, most famous for that. Why are you going to be in New York paying all these crazy taxes? So come down to Texas, get rid of the taxes. #2, as we like to feature on this show, the capital markets are moving to Texas. We've got the Texas Stock Exchange coming. NYSE moved one of their exchanges from Chicago down here. NASDAQ opened up an office. We're going to have to raise hundreds of billions of dollars for AI. Where are you going to do that? You're going to do it in Texas. So the capital markets come into Texas. #3, as we talked about today, energy abundance. The future of the economy is AI. Texas has the energy abundance to power that, and we have it abundant in oil. We're #1. Natural gas, #1. Wind, #1. Soon to be #1 in solar, and soon to be #1 in nuclear with Reed Clay's help.
If you take off rooftop solar, I think we are #1 in solar.
There you go. And we're going up every month.
Because we have a lot of industrial solar, not as much rooftop.
I like it. #4, meritocracy and excellent universities. We have the University of Texas system. We have the Texas A&M system. We even have the upstart University of Austin that's shaking things up. We have a commitment to invest in education and the future workforce and to reject this divisive DEI nonsense and honor meritocracy and celebrate success. That's the Texas way.
They got to be nimble, though. We talked about it last week with AI disrupting education, higher education in particular. With K-12 education, there's sort of a built-in client there.
100%.
But with higher education and the advent of AI, these universities, Texas universities, will be more nimble just because of the culture of Texas. And it helps to be a little bit younger, century or a century and a half old versus two or three centuries old.
Amazing
Some of
growth at
the East
University of
Texas.
Austin.
Yeah.
What they're doing is incredible.
Yeah.
I think no one gave them a chance. Now it's really just an awesome story. So love
Yeah.
to see it. Number 5, this is maybe most important. We are not communist. So
still capitalist last time we checked.
still okay to own a business here. So as New York goes down this kind of dystopian path, city of Dallas, we have a mayor that's declared Dallas a sanctuary city from socialism. So you don't have to worry about that. Come build a business. We don't need any communists here in Texas.
Yeah, and Mayor Johnson, Mayor Dallas, it's not like he's, some far right conservative mayor.
Far from it.
He's a former Democrat, centrist mayor.
Common sense.
Working on building, I guess mayoral elections are nonpartisan, but Mayor Johnson did switch to the Republican Party. But a centrist, pro-business, common sense mayor. Still got to get him into Bitcoin. One day we'll do that. But
Every day we're getting closer.
We're getting closer.
Don't quote me on this, but I think this is correct. The only 2 cities in the country that have a Republican mayor are Miami and now Dallas, as of him switching parties.
Top 10 cities.
More than 1 million.
Yeah, more than 1 million
residents.
population. Yeah.
Yeah.
Well, Fort Worth has a Republican mayor, but is it more than 1 million? I know
We're on the cusp there.
Yeah, they're like 950,000.
Who knows how you do these statistics now?
It depends on exactly. It depends on if it's the greater Fort Worth area or Fort Worth proper. But if it's the greater Fort Worth area, then they're over 1 million. Mayor Matty Parker out there in Fort Worth holding it down.
Good friend of the show. So.
Well, okay, I jumped the gun because we couldn't end without talking about Buc-ee's. There's nothing more Texas than Buc-ee's, but Buc-ee's
We had to give the top 5 reasons Texas is the future of finance.
Exactly.
Now we want to give a concrete example.
And Buc-ee's is going national. Tell us, maybe next week we'll have the CEO of Buc-ee's on the show. But
You're invited. Proud Aggie.
Proud Aggie.
First Buc-ee's on a college campus at the
A&M.
Texas A&M campus. Look, I think as Texans, everyone's had that kind of first time you went into Buc-ee's and you're like, what is this? Now it's a cultural phenomenon. I wanted to bring it into the show.
Good and the bad.
Well, that's what we're going to talk about in this article. I wanted to bring it in the show, an article that was in Pirate Wires. You can go to piratewires.com. It's worth subscribing to. But this was such a good article. They actually made it free. They're like, we feel like people should read this. The title, Buc-ee's and the Infinite American Spirit. So I see that come across my email. I'm like, I'm reading that.
Open that email.
And look, I want to read a little bit from the article. This touches on that cultural aspect. It's funny. It's a little tongue in cheek, but there's an economic piece here too. And I think that's actually really meaningful. So you have how a gas station mega chain with palatial bathrooms, beef jerky walls, and never-ending merchandise became a cultish American spectacle. That's well said. Pirate Wires just crushed it with this article, but I'll read a couple excerpts here. This endless bigness, however, is not one that makes you feel inadequate by comparison. It provokes some age-agnostic version of the trite, quote, kid in a candy shop emotion. One that in the American mind is almost always tied to shopping splurges and giddy over-consumerism. But even the aforementioned candy shop of our collective imagination is more boutique than expansive, owned not by the Waltons, but by some positively connoted Joneses, with whom you make small talk at church or the local market. This place seems to have established itself on liminal emotional ground, existing both as a temple of spending dollars and a relatable fixture of neighborliness. Despite having never heard the name Buc-ee's, let alone been inside one, you are struck by an unexpected pang of patriotically tinged nostalgia. I love that. The article goes on to kind of pivot off of this and talk about the incredible expansion of Buc-ee's. Used to be a Texas thing. Now it's, I think in 14 states, they're building like 12 new stores. It's starting to go
And these are
nationwide.
not like small gas stations.
Enormous.
Enormous. Hundreds
Enormous.
of pumps. Probably you think of your average Exxon and multiply it by 20 or more.
And that's been the whole model, is kind of go bigger. And the impact it has on these towns is actually really meaningful. And they highlight, in Texas, the minimum wage here is $7.25 an hour. At Buc-ee's baseline, $18. Managers make $200,000. Now in a small town,
$200,000 a year for a manager at Buc-ee's in a small town where the median income is probably $45,000.
that's right. So it's really actually very meaningful. And you see the value as well. My Buc-ee's is Temple. It's between Dallas and Austin. You have made that drive many times. I've made it many times. Standard stop is the Buc-ee's in Temple. Always packed. And you got to hand it to them. The people are happy. They're friendly. They're inviting you in. The food is hot. All of these things. But the way you get that is you invest in your people.
Yeah.
And so Buc-ee's one of the best jobs probably you can have in Temple, frankly. And it's awesome to see them grow there. It says in 2022, so this is a little bit dated. In 2022, the chain reportedly generated $2.5 billion in revenue with an estimated $200 million in net income. Both of these numbers have ostensibly gone up significantly since then, alongside the business' continued expansion. According to the Cato Institute, for every $100 in revenue, Buc-ee's makes a profit of $40, an insane figure for an industry plagued by razor-thin margins. This has been their business strategy. The sale of gas is actually
It's a loss
marginal.
Leader. It's a loss leader.
Maybe not a loss leader, but closer to a break even.
Yeah.
And they have all of these private label. We know the beaver nuggets that people go crazy. All the t-shirts. My kids have the t-shirt. And much higher margin on those private label products. So not only is it the biggest store on the highway, it's the most profitable on a square foot basis. Just an amazing business story. It says towns in Arkansas, Mississippi, Wisconsin, Florida, and beyond are eagerly courting the iconic beaver business, offering incentive packages similar to those reserved for large-scale manufacturing plants, multi-million-dollar infrastructure grants, free land, tax abatements, and more. In Harrison County, Mississippi, $15 million of an $18 million bridge expansion project was spent specifically to accommodate traffic for an incoming Buc-ee's.
Wow.
In Wisconsin, Buc-ee's is splitting $15 million in road upgrades with the state. Local officials expect new Buc-ee's locations, each providing upwards of 200 well-paying entry-level jobs to set new wage floors, boost property values, and bring in sales tax revenue. In Calhoun, Georgia, monthly sales tax receipts spiked by 15% after the opening of a new Buc-ee's location. It's a game changer for these small towns.
And potentially a new public company.
So I'm going to make my announcement today as the first person to sign the petition, which I haven't written yet, that Buc-ee's should be the first company to IPO on the Texas Stock Exchange.
In
What
Q2
company?
2026.
There you go. Q2 2026, Buc-ee's IPO. What company has a more exciting growth story, an incredible brand? It's synonymous with Texas. And when you think about the build out and adoption of electric vehicles, all of a sudden you need a place to stop 20 and 30 minutes. Where are you going to do that? You're going to do it at Buc-ee's.
Yeah.
I love the story. Love that it was founded by an Aggie. And even though it's a little bit of like the over consumerism, you got to love it.
Yeah.
You got to love it. I'd buy the stock. This is not financial advice, but Buc-ee's IPO on the Texas Stock Exchange. We'd love to see it. I'm going to close out with the last paragraph from the article, and you should go read the whole thing. It's great. Buc-ee's, a near highway megachurch and pilgrimage destination for the uniquely American blend of comfort, commerce, spectacle, and hometown folksiness, stands unrivaled. It single-handedly creates family memories, feeds our most desperate attempts to fill various God-shaped and antisocially created holes, raised up some of our most disavowed and disaffected, hooks us on sugar and stupid white-labeled landfill filler, and puts smiles on millions upon millions of traveling American faces. Paradoxical cultural phenomenon, beloved landmark, bona fide megastore, and bearer of the American spirit, I salute you. Can't agree with everything the author says, but it just puts a smile on my face.
I do agree that we got to get RFK Jr. in there to make America healthy again. Let's tone down the
huge
amount of
opportunity.
Trans fat and sugar sold at Buc-ee's, but it is delicious. Maybe just make it slightly more healthy. People will still buy it and eat your food.
The Maha branding leading up to the IPO would secure the biggest IPO ever.
Or we boom, circle out of here. Big
Bucky's don't disappoint us.
Yeah.
Love it. Well done, Pirate Wires, on the article. Look, this has been another awesome episode of Texas Capital Live. Don't forget to join us October 8th on the SMU campus here in Dallas. Go register at texcapcon.com. We'll see you at the TexCap conference.
And we'll see you next week, Tuesday, going live every day, 10 a.m. Central.
Yes, sir.